Our base case is in the $600,000 range. Our bull case, and we think the probability of the bull case has increased with this SEC approval. This is a green light. Our bull case is $1.5 million by 2030. You can see the building blocks. You can see how conservative we are in terms of those building blocks. This is a big idea. It is the first global, decentralized, digital, rules-based, critical there, rules-based monetary system in history. It is a very big idea.
Could Bitcoin really hit $1.5 million by 2030? It sounds unbelievable, but star investor Cathie Wood thinks it's not only possible. She's got research to back it up. The CEO of ARK Invest isn't just any prognosticator. She's the one who famously predicted Tesla's explosive surge when few others did. In 2018, as Tesla traded around $300, she boldly forecast the stock would reach $4,000 within 5 years, a 1,200% leap that did materialize years early. That bold call, along with bets on other disruptive tech winners, cemented Wood's reputation for seeing the future before others. Now she's making another eyebrow-raising prediction that Bitcoin could soar to $1.5 million per coin by 2030. Stay with us, because we're about to break down exactly why she believes this, using the hard numbers and logic from ARK Invest's research. Not hype. This isn't a get-rich-quick pitch. It's a deep dive into the factors that could drive this massive increase in Bitcoin's price over the next decade. So why exactly does Cathie Wood envision Bitcoin reaching $1.5 million? The answer boils down to one word: adoption. ARK Invest valuation models add up multiple use cases and sources of demand for Bitcoin. If Bitcoin becomes a mainstream asset across institutions, corporations, and even nations, the combined impact could drive its market value into the tens of trillions of dollars, which translates to that 6- or 7-figure price per coin. Let's unpack the key assumptions behind ARK's forecast, each backed by data. First, institutional investment. ARK Invest expects big institutions like banks, hedge funds, and pensions to allocate between 1% to 6.5% of their portfolios into Bitcoin. Even a conservative 2% allocation across global institutions would inject trillions into Bitcoin. 2% may sound like a tiny allocation, but consider the scale. The global market of stocks and bonds runs hundreds of trillions of dollars. So even a small allocation would significantly boost Bitcoin's price. On top of that, corporate treasuries, companies like Tesla, MicroStrategy, and Mercado Libre have already pioneered holding Bitcoin as a reserve asset. For a deep dive on that, check out this video. ARK predicts corporate cash allocations into Bitcoin could range from 1 to 10%. Just a fraction of Fortune 500 companies shifting part of their cash to Bitcoin could lead to massive new buying demand. Bitcoin is also rising in its role as digital gold. Gold's market cap sits around $10 to $12 trillion. And ARK projects Bitcoin could capture 20% to 60% of that value. Even at the low end, 2 to 3 trillion moves into the asset class as investors and institutions seek inflation hedges. At the high end, Bitcoin sees 6 trillion of inflows due to its benefits like transferability, verifiability, and scarcity without physical limitations. Interestingly, Bitcoin's also evolving into a risk-off asset. Here's Cathie explaining why.
Well, I think something very important happened last year. In March of 23, regional bank crisis here in the United States. Regional banks imploded, some went bankrupt, and Bitcoin exploded. It went from 19,000 to more than 40,000. What did that demonstrate? That demonstrated that Bitcoin does not have counterparty risk like banks do. And so it became a risk-off asset. Its correlation with other assets is so low that institutions have a fiduciary responsibility from an asset allocation point of view to at least look at it.
Bitcoin also serves as an inflation hedge, particularly in emerging markets facing currency crises. ARK anticipates Bitcoin capturing 0.5% to 6% of monetary supply in these regions like Latin America and Southeast Asia. Countries like El Salvador and hyperinflationary economies like Venezuela and Turkey already demonstrate this trend. Here's Cathie Wood explaining the impact of even a small slice of global monetary supply, excluding the Big Four, moving into Bitcoin.
We do believe in our price target for Bitcoin. In our base case, we believe that if you were to look at global money supply and take out the Big Four, so that's US, UK, Japan, and Europe, take those four out. The rest of the global monetary supply, we assume that 3% will effectively, that Bitcoin will take over 3% of it. I think that's a very conservative assumption, but that gives you a sense of, and I know when we get to price targets, we don't sound conservative, but 3% is conservative. I think it could be much higher. I think it could be 20%, because I think President Bukele is showing the way. You know, you want to increase purchasing power. You want to increase wealth. And this is for countries and individuals whose purchasing power and wealth are being destroyed. You know, they need an insurance policy.
Combining these factors, ARK laid out 3 scenarios by 2030: a bear case at $300,000, a base case around $700,000, and a bullish scenario up to $1.5 million per Bitcoin. The bullish scenario requires roughly 58% annual growth. So, what do you think? Is $1.5 million Bitcoin a realistic possibility or overly optimistic? Let us know your thoughts. At the very least, ARK's research gives us a fascinating insight into how Bitcoin could evolve into a truly global asset by 2030. Stay curious, stay informed, and as always, we'll keep tracking these big ideas shaping the future of finance.